Hello, everyone. Welcome to the Accountant's Minute podcast. In fact, the last one for this year. So we will be back with you in January 2026. Today, we're following through the innovation journey, and I'm joined by Darren Gleeson, the Managing Director of TaxFitness. How are you today, Darren?
Fantastic, Peter. Thanks for inviting me here today.
TaxFitness includes a fantastic product package on benchmarking, and we're going to have some discussions, Darren and I, shortly, about how benchmarking fits very nicely into this overall picture of Chief Financial Officer services. In the innovation journey, we've taken you through 8 series up to this stage, and today's the 9th, which is looking at the Chief Financial Officer services. This is a very important part of the responsibilities for accountants, in my opinion. The duties and responsibilities of a virtual CFO are virtually the same as the responsibilities for a CFO in a public company. There are some differences, of course. The CFO's in residence in a public company and is normally there for 50 hours a week or thereabouts. And that person, though, is advising the CEO on a day-to-day basis. In my experience, when I was a CFO, on an hour-by-hour basis of all sorts of questions, and also the other members of the leadership team. And this is one of the big things that SME CEOs are missing out on. They haven't got an internal accounting expert who's helping them with their work, who's interpreting the figures, who's analysing what their figures are like as compared to their competitors, which is what Darren's going to talk about in a moment when we look at benchmarking. So this is all part of helping clients that want to scale up, want to grow their businesses, want to do what we've talked about in this innovation journey, starting with an idea, then going through a research and development application, and then working through the research and development processing. Perhaps getting a cash payment from the tax office. Not many people can do that, but you can if you're undertaking research and development. And at that stage of that company's career, they're trading at a loss. They can get a cash payment equivalent to the R&D tax offset paid to them by the tax office. And in fact, they pay that within 30 days of the tax return having been lodged, which is very beneficial for a lot of people starting off. But then we moved through the other information that you need if you're going to raise capital. You need a business plan. You need predictive accounting reports, budgets, cash flows, key driver, that's the vital sub-accounts, debtors, creditors, inventory, capital expenditure, research and development, so that it can be monitored, not hidden away. And we all know it can be hidden away in the budgets and cash flow forecast papers, but that's not good enough. It's got to be isolated. So each week or each month, a review can be undertaken to see what the actual investments are, whether the investment in debtors has blown out. The debtors days outstanding was budgeted at being 38 days and it's suddenly 48 days. Well, that's going to be a big drain on the cash flow forecast for that business. So the challenge for accounting firms is to clearly identify the services that you can provide to your clients. Now, I know you won't get every one of your clients interested in virtual CFO services. And in fact, some firms that have gone down this path have reduced their client numbers because they're saying our clients want more services and they're going to pay us a lot more money. Therefore, we're going to reduce our overall number of clients. So you may end up in a situation that all of your clients are receiving the full accounting service. At ESS BIZTOOLS, we're committed to providing you resources for financial, commercial, management accounting. And in management accounting, of course, we include benchmarking. There's a whole range of activities, and if you're reading and have read the Accountant's Minute edition, you will know that there's at least 30 different items that we've listed under the Chief Financial Officer services. And one of the key ones is analysing the performance, being able to talk with some authority to your clients to discuss whether the gross profit percentage they're achieving is in line with industry estimates. And that's where I'm going to turn to my colleague, Darren Gleeson, today. Welcome, Darren, once again, and thanks for joining us today. Darren, do you want to just tell us a little bit about TaxFitness and your involvement in benchmarking?
My background was in public practice, 15 years experience there. Then 20 years ago, started a tax franchise group called Success Tax Professionals, now 75 franchises operating Australia-wide. 8 years ago, we started TaxFitness with a focus on tax planning software. And then 2 years ago, we started the journey into business advisory and business benchmarking. And with our business benchmarking, we call it the top 20%, and we'll get into it soon, why it's called the top 20%.
Very good. And Darren's gone a step further than what I've ever done in my career of writing things for accountants. Darren's written a very interesting book, the TaxFitness Top 20% Business Benchmarking System, which explains very clearly Darren's philosophy and obviously TaxFitness's philosophy on putting this package together. So, Darren, we'd like to discuss a few issues, of course, to make sure that accountants and bookkeepers understand. So what are the challenge, do you think, for accountants and bookkeepers based on what the Small Business Ombudsman's report recently indicated was the state of SME businesses in Australia?
Well, the way I see it, accountants and bookkeepers got 3 or 4 main challenges. The first thing is they're dealing with the increased complexity of compliance and regulation. It's just getting worse. All this talk of reducing red tape is a complete joke. We just keep piling red tape onto red tape, and of course it hits small businesses, but it impacts accountants and bookkeepers because they've got to deal with it often. The second issue, of course, is, as we were reminded this week, inflation is still not under control. So businesses are dealing with cash flow profitability pressure, which is a risk for clients, but also an issue for accountants have got to deal with. The third thing accountants and bookkeepers got to deal with is the greater demand for advisory, planning and strategic support from their business clients, because there's no doubt, as Peter talks about, small business clients need all this assistance, and if they don't get it from the accountant, who do they get it from? The person at the pub, the brother-in-law, I don't know, some internet forum? I don't think so. And then the fourth major challenge for accountants and bookkeepers I see is, and everybody's dealing with it, time pressure. We're all overloaded. We haven't got enough time. The bucket is full and we're trying to put more water in it and it just overflows. Doesn't work. Yeah.
And the other big item that the Ombudsman talked about was the financial performance of a lot of the SMEs. You commented on in one of your articles recently.
Well, it's depressing reading, isn't it? 43% of small businesses are losing money. And then another 25% are making profits, but their profits are less than the average Australian wage.
Yeah.
So 75% of small businesses are not making a wage. That's and the flow-on effect to the whole economy and productivity and GDP and standard living. It just goes on and on. Okay.
There are other benchmarking services in Australia. What differentiates the TaxFitness benchmarking system from the others?
Okay, most accountants are probably familiar with the ATO small business benchmarks. There's about 120 of those. They're basically benchmarks produced by the ATO from the ATO data for different industries, say an electrical business, for example. But we've got to remember, this is data produced from ATO records, so cash may be missing, dare I say it. Some of the figures, are manipulated and different things. So they're good for accountants to use to stay out of the ATO clutches and audits point of view, but to benchmark business performance and improvement is just a waste of time. There is a couple of other benchmarking software out in Australia, a couple of different options, which I won't mention today, but you can put in a quick Google search and they'll pop up yourself. And then finally, there's TaxFitness.
Well, what's the key point of differentiation of the TaxFitness system? Is the pool that the comparisons have been made
Yeah,
to.
well, the distinguishing factor with TaxFitness is ours is called the top 20% benchmarks, and we're benchmarking against the KPIs and the profitability and the revenue of the top 20% in each industry. So we don't care about, the 50% percentile, because as we talked about, 43% of those are losing money. So why would we benchmark against that? It's just crazy.
Okay. So what are the key items that benchmarking identifies that accountants who are in public practice might not be used to dealing with, of course? I dealt with benchmarking for many years. I was in a public company in the meat industry. We compared ourselves to the other major meat companies. But that doesn't tend to happen, unfortunately, in a lot of accounting firms concentrating on taxation. So what are the key items that you think are going to be identified for the accountants
With
that are
our
listening?
top 20% process, the first thing is we want to work out what the gap is. So what we want to, first of all, quickly determine in a couple of minutes is the client's profitability after paying market salaries. And then we want to compare that to what the top 20% in the industry are making. So I might be making 100 grand and the top 20% are making 200 grand. So we've identified the gap, which is $100,000, for example. And then we work out how we can close that gap. And how we close it is we look at the KPI that's causing the trouble. And it could be, we've made it simple. There's only 7 KPIs. There's actually cost of goods sold, subcontractors, rent, wages, overheads, owner's compensation, which, as you talked about, it's going to be benchmarked to market, and profitability. And that's it.
Yeah.
You're probably aware, Peter, you've probably seen some benchmarking reports and they benchmark 200 things, the price of a cup of coffee by the staff every morning and their donuts, but it's not really material,
Okay. I noticed in one of your comments that some accountants say to you at times, my accountants are struggling, but benchmarking to the average performance just doesn't help them. So
I agree 100%. I can't emphasize enough that benchmarking against the averages is complete nuts. It's like, I'll give you an example, like the airline industry worldwide, as Warren Buffett said, it's been a disaster of an investment. Like, since the last 100 years, add up all the airlines in the world, all the profits they've made, take off all the losses, and there's a big pile of losses. So the average airline in the world is losing money. Okay, so if we're running an airline, we don't want to benchmark against the average because, we'll be out of business quickly. We want to benchmark against the top 2, 5, or 10%. They're actually making money. Same story with this,
Okay. In your benchmarking summary, you emphasize that it should be a short report, or it's not a long-winded, and you probably just alluded to that with your comments about some of the others have got benchmarking of 100 different things.
Well, the first thing is there's 2 ways we can approach it. We can do the 5-minute benchmarking. So very quickly, I can benchmark your business and we can see your profitability, what it is at the moment. Maybe it's 100 grand. And then we can benchmark it against the top 20% and what it could be or what it should be, which may be 200 grand. So we identify that $100,000 gap. We can do that in 5 minutes. Okay. And then we can have the conversation about what we can do to close that $100,000 profit gap. And then the second thing is that's a teaser, that's to get started. And then if we're going to go into the full detailed benchmarking report, it's going to take maybe an extra hour or an extra 2, because we want to look at what is causing that 100 grand profit. And it might be cost of goods sold is too much, or it might be overheads, or it's staff or whatever. And then we need to think, and the software's got the strategies in there, but we need to think about, say, for example, our cost of goods sold is 30% instead of 25%. What strategies do you think could reduce cost of goods sold, Peter? What would pop into your mind?
Oh, quantities that the goods have been purchased in.
Yeah.
Is there discounts if they buy a wee bit more?
Discounts, all that stuff.
Yeah.
It'll pop into your mind, but we've already sort of pre-written 30 of them.
Yeah.
And it's sort of like a smorgasbord. So the advisor, like yourself, instead of having to reinvent the wheel, you just look at the 30 and think, these 5 I think will apply to Darren's business. Chuck them in the report. Let's have that meeting and let's discuss it.
Okay, righto. I gather that some accountants have said to you they think their clients will feel uncomfortable being compared to the top 20% in their category. Why would that be so?
Well, it's like everything. I think that's actually great. Yeah, the response is yeah, probably. But I think we all need to be uncomfortable to change.
Mm.
It's like, we're feeling a bit overweight and we're not exercising and not eating right. Not looking at the scales, does that really help us? It's just we've got to shine the mirror up against, and your performance is what it is.
Mm.
So I think being uncomfortable is essential for change.
What sort of reaction do you get from a typical SME operator who, for the first time, their accountant starts introducing them to the concept that they can compare themselves to their competitors?
The first thing they say generally is, Peter, why didn't you tell me this before? Like, why didn't you tell me this 2 years ago or 5 years ago? You've shown me now that I've missed that 100 grand a year in profit. But why didn't you show me 5 years ago? I would have had 500. So that's the first thing. And then the second thing they say, now I finally understand what's going wrong with our business. I was working hard, the profits weren't where we thought they should be. Now identify what the problem was, too much staffing or too much cost of goods sold or whatever. And then the third thing they say is, so is it really this simple, Peter, if we just fix up this cost of goods sold issue that I'll have an extra $100,000? And in some cases it is. Yeah.
Yeah.
Often it comes down to one thing, it's like accounting practices, the biggest KPI or factor normally is staffing. So if I'm paying you 100 grand, you've got to be producing 300 to 400. If you're only producing 200, that's smashing my profits.
Yep.
So let's not make it too complicated.
How many accounting firms benchmark themselves against the industry figures?
Good question. Last week I did a webinar with Tax Nuggets called, the top 20% business benchmarking. Anyway, at the front of the start of the webinar, we had a poll. It turned out of the attendees, so sort of, I suppose, not a bad sample, only 10% benchmark their practice every year.
10%.
10%, which is not brilliant.
And did those 10% indicate what benefit they got out of doing that?
Well, no, we never dived into it. 10% benchmarked every year and another 20% benchmark every couple of years or something. But it's 101, isn't it? We've got to be doing it every year.
And were they benchmarking against the TaxFitness 20%?
No. We're just asking in general. It could have been any, the professional body, CPA, chartered, IPA, they put out benchmarking reports, and there's a lot of other stuff and Xero and all this. So, yeah.
So it's pretty important in this overall exercise, is it, that if an accounting firm's going to be preaching benchmarking to their clients, they should be doing it themselves?
Well,
to their own firm?
You've got to. It's like I go to a personal trainer or something at the gym. If the personal trainer doesn't exercise or doesn't eat right or doesn't look in good shape, how can they be telling me to do my laps and my my weights? It's just ridiculous. It's just ludicrous. It's just false, to be honest. It's just.
Have you followed through, or your organisation, TaxFitness, followed through with what happens within a business after a SME's, in effect, seen the light? They've gone through a benchmarking exercise. They've been told that, they're 10% behind in their GP or various other percentages. What happens over the next 12 months in that business, that SME business?
Well, there's two things. When you show a business, the gap, the 100 grand gap we talked about, some will just say, yeah, that's interesting, and do nothing. Some will say, yeah, that is great, I'll work on it myself. The ones that get the best results, of course, is when they do the advisory program, and either monthly or quarterly benchmarking advisory program over a minimum 12 months. One of the big success stories was a plastering contractor company, $12 million turnover. Anyway, 2 years ago, they only had about a 300 grand profit. We started benchmarking, and the big thing in their case was their subcontractors are 70% of turnover instead of closer to 40% for the top 20%. Short story is every quarter we caught up with them and went through, kept working on strategies to tidy up the subcontractors. Short story is over that 2 years, it went from 300 grand profit to 2 mil. So that's
300 grand to 2 million.
We're in the wrong business. Why be an accountant when you can be a plasterer, or run a plastering company?
I dare say that got the client's attention.
Definitely. But the whole thing is with the report is one thing, but it is the monthly or quarterly meetings. And I hold you accountable, Peter. You said you're going to do this by next quarter. Let's see what you've implemented, because it's all right doing a report, but we need to actually implement stuff and make changes.
Right. Is there any negatives to doing business, to doing benchmarking?
I can't see it. What's the negative?
I can't see any, but I'm just, it's not an everyday thing, is it? There's thousands of businesses. There's probably thousands of accounting firms not doing it.
Yeah, no, that is true, but that is probably that really comes back to the sorry state of profitability of small businesses, isn't it?
Yeah.
Because what you were talking about, and what one of my friends always talk about, the difference between a small business and a big business is the big businesses have got the systems, they got the CFO, they got all that reporting and management that the small business hasn't. So that's why they're generally a lot more profitable and they get to be a big business, not just a small business. Because every big business is going to have all these KPIs and benchmarking and CFO type services.
Yeah, but in my experience in being in the hot seat in one of them, and that was some years ago now, of course, and
sure.
we didn't have all the technology we've now got, is that systems might have been implemented at one stage, but unless there's a discipline, and that's someone like the CFO going around and clapping their hands or talking very nicely to people to get their act together, things just get forgotten.
Oh, 100%.
Well, no one asked me about this, so I don't bother doing it.
Yeah, but that's why the accountant has got a perfect role, because it's that accountability. You hold the business to account. Because the problem with being a business owner, you're only accountable to yourself. So sometimes, you just let things slide and all that. So having that independent accountability is gold.
Well, thank you very much for that overview, Darren. That's been very interesting, and I hope the people who are watching this podcast will, if they're not currently doing benchmarking and you want to know more information about the TaxFitness system, they can do so by contacting you. And between TaxFitness and ESS BIZTOOLS, there's a special promotion on at present. So do you just want to a word to that?
Yeah, using the at the moment the TaxFitness annual subscription is $1,200 plus GST or $1,320. If you use the ESS100 referral code when you're signing up to take an annual subscription, you get a $200 discount.
Okay, so it's a 200. So that's something worthwhile for them for people to take advantage of, isn't it?
Yeah, definitely. The other thing about the TaxFitness software, of course, it's got the top 20% business benchmarking module, which we talked about today. It's also got the tax planning module, which will be useful for people in the February to June period next year. And also we've just added the occupation deductions database. So we've got 501 different industries. So say if you're only doing salary and wage returns and you've got a pilot, you'll be able to find out the exact ATO approved deductions for a pilot, what's not deductible, etc.
Oh, okay. Very good.
501 different industries as well.
Okay. So you got a wide range of information there to help in the tax
We've got a lot of stuff.
process.
Exactly.
Yeah. I know that.
And in progress, it's just been launched a month ago. We're building a business valuations module as well. So for each individual business type for an accounting practice, we'll talk about how accounting practices are valued, for example, versus a plumbing contractor or a retail business of some sort. So we'll have that extra resources, which ties back to your business advisory stuff as well and CFO type services.
Thanks for all that, Darren. That's very interesting. So what we're trying to highlight today by having Darren make these comments on benchmarking is that benchmarking is an integral part of this overall duties and responsibilities of an accounting firm in performing a virtual CFO role, but it needn't even just be for a virtual CFO role. If you've got a very small client, but you're only just doing normal accounting services, benchmarking can be a very important process. And Darren's mentioned there on one occasion that in some firms they're then monitoring it every quarter. Is that right, Darren?
Exactly. Some are doing it monthly.
Monthly, so monthly or quarterly. So, and
Definitely.
you gave me an example. Do you mind commenting on that client that really grew and what the fees were that the accountant was
Oh
receiving
yeah,
doing
sorry,
benchmarking?
I missed out the second part of the story. Before we did the benchmarking with the journey with the client, they were just a $3,000 compliance client a year. So the accountant see them once, and the accountant would, the client wanted to pay as little as possible and all that, standard stuff. But anyway, we had the meeting, we showed them the big gap and all that, signed them up on the advisory package, $4,000 a month. So 48 grand a year. So 2 years, $96,000,
It's a lot of money, isn't it?
Well, but what's 96,000 when you've taken a business from 300,000 to 2 mil?
Yeah.
And from the accountant's point of view, it was only done every quarter. So it was 2 or 3 hours putting it together, thinking about things, and then an hour and a half meeting.
And the note that I'd like to finish on today, and just looking at all this, is that this is interesting and challenging work, isn't it? I know that there's a computer system there churning it out, but it's then the interpretation. That's where the brain, the university training, etc., comes into play. Accountancy firms all over Australia, when I talk to them, are complaining about trying to attract people to work for them or retain people that already do work for them. This work, combined with the other work that we've got within ESS BIZTOOLS, I honestly believe will help accountancy firms to attract and retain staff because it gives some variety. The modern generation are not going to sit there doing tax returns all day. I think that's becoming very loud and clear. My son is whinging to me. My son's an accountant in a firm, and he's whinging recently about the new generation. So he's telling me about the new generation, really not wanting just to sit there and do tax returns. So this is an ideal work benchmarking and looking at performing virtual CFO services.
Yeah, 100%. And the other factor is you'd have to live in a cage to not realise that AI is here and it's getting better, and all that lower stuff, bookkeeping and putting numbers in little boxes, that's going to be gone very soon. So, yeah, people need to retrain and reskill and add extra value. Otherwise, they're going to go the way of the video store, So.
Thanks very much, Darren. So this is the final podcast for this year, as I indicated before, because it's the final Accountant's Minute. For this year, we'll be back on the 19th of January with 2026. Please reflect on what Darren has indicated to you today about the benefits of offering a benchmarking service. And there is a special promotion on at present that you can avail yourselves of. You just go to TaxFitness website. So what is that again, Darren? Thanks.
www.taxfitness.com.au. Up in the right-hand corner, pink button, you sign up for a trial, and then you can go in there. You can go for a 14-day free trial, and then you go to pay. Just put in the referral code and get the discount.
And if you're coming from us, just put in the referral code of ESS 200. Oh, sorry, ESS 100, isn't it?
Exactly. Yes.
ESS 100, but you're getting a $200 discount.
Definitely.
And we look forward to hearing from you if you've got any questions on any aspect of the other key matters that we've discussed in this innovation journey, which obviously started with a concept of looking at someone who, someone in their workforce come up with an idea and said, hey, boss, why don't we do such and such, or why don't we make something a little bit different? You could avail yourself then of research and development, as long as it's a company and more than $20,000 per annum is going to be spent on research and development activities. Records have got to be kept. Some accountants say to me, "Oh, Pete, I'm not a scientist or an engineer," and I say, "So what?" And the response I've had a few times is, "Well, we're going to do all this research work." Well, very clearly, let me state, you do not have to do any of the research work. That is your client's worry. Your job, if you want to pinpoint a description for it, I think you're the internal auditor. You've got to make sure that the records are kept, and basically they've got to account for their team's time. Anyone that's getting charged to research and development has got to be completing, in effect, a timesheet for every time they spend. Now, if they only spend 1 day a week on the project, that's only 1 day's timesheet. If they're working for the other 4 days in some other aspect of their role, the tax officer's not interested in that. But what they are interested in is what's getting charged to research and development, because there's a premium being allowed by the government and the tax office for working on research and development activities. We then moved into making sure that the vision's set in the business plan and the budgets and the cash flow forecasts. And obviously benchmarking would be very important there to say, well, what's your budget saying for various things like gross profit percentage and labour to turnover as compared to a benchmark for that particular industry. We then looked at the funding. Not many of the SME clients have got spare money around to build a factory or new warehouse or whatever might be required. So if they're looking to raise funds, we've discussed the early stage innovation company process, crowdsource funding, Section 708 of the Corporations Act, capital raising, and venture capital. They're all available for SMEs. The venture capital is probably the hardest one, could also be the most interesting one, because you then have your clients dealing with mainly sophisticated investors. And then we moved into the finale of all this process is what's the Chief Financial Officer service, because we see that you're the glue that holds all this together. And obviously understanding how your clients are comparing to their competitors is very important so that they know how to put all this together. So we look forward to hearing from you. www.essbiztools.com.au. We have a special promotion on that's run over from Black Friday because we never got it all finished in time. That concludes on Monday night, this coming Monday, and there is a 75% discount. We were originally only going to offer 50%, and then I read the report from the Ombudsman about the state of small business in Australia. They do need accounting industry assistance, and we're hopeful that that extra 25% will be an inducement to accountancy and bookkeeping firms who are interested in doing some of this work to proceed and get started, so you can be geared up, ready to really start offering services from January, which is only a couple of weeks away. And one final thing I want to say, please don't think that we're advocating you've got to go out and suddenly have 50% of your clients all go into benchmarking or business advisory services or any of these things. 1 or 2 clients at a time is the way to do this, to successfully bring it all on board. Get your team trained, get them comfortable in this overall process. As this is the final Accountants Minute podcast for this year, may I take this opportunity of wishing every one of the accounting firms and bookkeeping firms that watch these podcasts a happy Christmas and a very prosperous and successful 2026. And Darren, obviously that goes to you. Happy Christmas to you and your colleagues at TaxFitness and STP. And we look forward to being of service to everyone again next year. So thank you very much. Thanks, Darren, for joining us today.
Thank you. Goodbye.
And we'll talk to everyone next year, 2026. We'll be starting again on all of our promotions from the 3rd week of January. Stay safe. Have a great day. Goodbye.